Hello, my name is Angel Clark. I'm one of the VectorVest instructors, and I'd like to welcome you to this week's strategy of the week, fine-tuning the confirmed calls. This week, we're going to teach you the secret to maximizing your profits while greatly minimizing your risks. Whenever I want some great investment ideas, I read through Dr. DeLito's essays and special reports that he's written over the years. It is a huge archive of knowledge and really an invaluable resource that everyone has access to. The impact these techniques can have on your portfolio and your success as an investor is huge, and they can spark some really great ideas. That's actually exactly how this week's strategy came about. We're going to start with the timing system that we've been using at VectorVest for more than a decade, the confirmed calls. We've been using them that long because they work incredibly well. But as usual, we're always trying to make the information we give you at VectorVest even better. So we're going to fine-tune that system even more using techniques that Dr. DeLito has talked about that can dramatically cut through volatility, practically wipe out the impact of whipsaws, and give you a sane, sensible way to make money no matter what this crazy market is doing, which is really the holy grail of the stock market. So let's get started and see how it works. We'll cover timing first, of course, so we'll jump into the program and go to our graphs. Here we'll select a market timing graph, and I'm going to expand this to about 1.5 years. There is good. Take off the last close. If you've been keeping up with the VectorVest views and the essays that Dr. DeLito writes, he's talked a lot about the importance of follow-through and named multiple ways you can confirm the market's direction. He also introduced combining complementary indicators to enhance market timing signals, giving you better entries, better exits. Who doesn't want that? The first time I remember this being done, though, was back when the simulator was introduced. So some of you might not know about the simulator. It's an amazing backtesting tool for those of us that really like to test ideas. And there's a timing system in there that combines both the DEW timing system and the primary wave. You'd use the slower DEW timing signal to start off your trading and get the signal to get started, but you'd only take action and trade when the primary wave was in agreement with the DEW signal. So they both had to be up to buy a stock, they both had to be down to sell a stock short. It makes perfect sense. And this concept was used again when Dr. DeLito wrote about the very popular Enhanced Pro Trader Market Timing Graph. That was back on November 30th of 2007. Can you believe it's been that long ago? This time, though, he combined the traditional DEW timing signal with the shorter term MACD signal. We're going to continue with that same concept of combining. We're going to combine the classic VectorVest confirmed calls, and for our shorter term complementary signal, we're going to use the green light buyer during confirmed ups, and we'll use the primary wave during a confirmed downturn. And I'll explain why we change and switch between those systems in a moment. But let's take a look at this last 1.5 years. As you can see, if you were a longer term investor, you wouldn't have made very much over the last 1.5 years. In fact, I checked out the PTSE, the TSX composite, and even if you managed to get in at this low, through today, it's up less than 5%. 5% in 1.5 years. That stinks. But if we use our markers to turn on our confirmed calls, you can see that we have a beautiful entry point into the upturn that the rally experienced on July 23rd. And of course, that was a nice long run that ended on March 14th. Had a little bit of a whipsaw there. And then that final confirmed down came on April 18th, where the market was also hitting a double top. Even within this upturn, though, let's zoom in even further. We can see that the market still pulled back a few times, making us a bit nervous, especially steep during the end. And in these kind of uncertain economic times, even those little pullbacks make investors anxious with good reason. That's where the green light buyer system comes in. It's going to be there to guide us and give us a little peace of mind. The peace of mind that we won't actually destroy our portfolio, our nest egg, potentially our life savings by being in the stock market. So let's turn those on. Switch to green light buyer. And the first thing I think is, whoa, that's a lot of signals. But really, that's just representing, those little green triangles are representing when we have a green light in the price column of the color guard. So very, very simple. The yellow is showing when we don't have a green light in the price column of the color guard. So when we do have that green light during a confirmed up signal, it's reassuring us that the market is following through, that it is still rising on both a week over week as well as a day over day basis. When things start to get a little rocky, we're not going to see a green light until the coast is clear. So you can check that out when I hover over that yellow light and this yellow signal. But this let us get right back in as soon as the coast was clear. Look at this. We actually went to a neutral position, no more green lights, on March 7th. The confirmed down signal, which is the same for the green light buyer as the confirmed down system, happened on 3/14. You got advance notice of that downturn to slowly ease your portfolio into cash. And I just think it's fascinating how quickly they respond to even the slightest pullback and rally in the market. That would have been a great entry point or re-entry point into this entire rally. Same with here, and so on. So these green lights are all of our reassurances all along the way, telling us that the market is continuing to go our direction. And we don't have to close out of all our positions when we don't have a green light. At that point, we just use our stop losses to manage our risk. And then we wait before buying any more stocks till the coast is clear and we have another green light. And we just keep repeating that process until we hit the confirmed down call. When the confirmed down call comes, that's a sign that something major is happening. The market is now crossed below its 65-day moving average, and the MTI, that underlying trend, is crossed below 1. That's pretty big. We don't know how long it'll last. We don't know if it'll last. But we have seen things get very ugly when that particular situation happens. So we know we need to really protect ourselves. So on a confirmed down signal, we would close out of all of our bullish positions. So I think you can see how the green light buyer system really is a beautiful complement to that confirmed up signal. Wait for your confirmed up, then only take action when you see the green light. If there isn't a green light, just let your stops manage your position, and when you hit a confirmed down, close out. When we get that confirmed down signal and we want to take advantage of the bearish side of the market, we need a different complementary indicator to let us know when the market is following through in that larger confirmed down. We can't use the green light buyer system because remember, its down is the same down as the confirmed call. So we'll use the next best thing, which is going to be the primary wave. The primary wave looks at the price of the market, specifically the VectorVest Composite Canada, and when it's higher than it was 5 trading days ago, market is rising, primary wave is up. When the market is lower than it was 5 trading days ago, the primary wave is down. So let's go back to our confirmed calls and zoom into that downtrend. I'll take it all the way through current. This is where people really struggle to make money. The downside is not as comfortable. Zooming into that downtrend, you can see that this side of things is a lot more volatile than that upturn we just looked at. But it's a huge money-making opportunity when you have a system as great as VectorVest. And frankly, in the market we've been in, it can be a big waste of your capital not to participate in the downtrends. While you're in this downturn, you're not going to be trading any bullish positions. It just doesn't make sense. The confirmed call is telling us that the tide has changed. We need to focus on the bearish side of things. That's where the money's at. If you can't short or you can't use options, don't worry about it. There's always contra ETFs, but only buy them when the primary wave is also down. If the primary wave changes, let's just take a look at that. If the primary wave changes to up, you'll once again just start managing your bearish positions that you have with your stop losses and not add anything new. That's the way to make that smooth transition if things really turn around. I know looking at these signals that might seem like a ton of trading, but it's actually not bad at all since we're not jumping out of everything when our short-term signal changes. We're just using our stops. If you're still worried that you'll end up paying for your broker's vacation home, I'll show you another technique that's also been written about that will slash the number of trades you make and still let you enjoy a respectable gain with a tolerable drawdown. For now, though, I just want you to take a look at the pain you would have avoided by not being bearish during these primary wave ups. Yes, the overall trend is down, and it's a juicy downtrend. It's one where you should make a lot of money to the downside, but it would be excruciating if you were in bearish positions during these confirmed ups. And they save you, I'm sorry, I said confirmed ups, these primary wave ups, and they would have saved you again and again. Now, if we focus on the primary wave downs, look at what a gorgeous entry point that is for being bearish. Same here. And once again, it happens over and over again. This is no fluke. This is a system that works and works consistently. So let's set up a portfolio and we'll prove it to you. We'll go to our backtester and backtest an idea. We'll just use 25,000. You don't need a lot of money to make money with VectorVest, but if you do have a lot of money, you don't have to have it all in the market. You can use a fraction of it and still enjoy some great gains. $9.95 per trade for our commissions. Don't use any margin. If we check out the advanced tab, there's our commissions again, no margin, no interest. We're buying and selling at the next day's open. What does that mean? It means that even if you have a full-time job, you can do this all at night when you get home. As far as time, wouldn't take you 10 minutes. Execute test in daily pricing mode. And for our timing system, I am going to use the confirmed calls to set my date range. But within that confirmed call range, I'm starting with the upturn, so I'm going to use the green light buyer. And it explains that system to me right on my screen. Up signals are given when the color of the price column in the color guard is green. Down signals are when the confirmed call is down. Neutral is going to be any other time, so if there's a red or yellow light in that price column. What do I want the system to do when we do have a green light buyer up signal? We've got a green light in that price column. You could use any bullish search you wanted. Something that was a favorite, a derby leader, a derby winner, maybe some of the model portfolio choices, all would be excellent. But I really like the idea of using our best performing ETF strategy. That keeps things nice and simple. These are exchange traded funds. They already give you more diversification than a single stock purchase. Diversification is a part of managing risk. So that was a big focus of this particular strategy. It also means that I don't have to buy as many positions for my portfolio, which saves me a little money on commissions. We'll move to our next tab after we choose best performing ETFs and choose our stop criteria. We'll go with a trailing stop. Now that's very popular. We'll change it to 15%. That is a little generous, especially since we're only going to be handling a 5-position portfolio. But remember, I'm only investing $25,000, which is a fourth of what we usually use in these demonstrations. And I'm also going to be adding a lot of risk control by combining that confirmed call with my shorter term signal. And that brings us to the next tab where I can make those decisions. So 5 positions, we're not going to replace positions until our next signal. We're going to go ahead and buy all 5 positions at once, but you could certainly ease in just buying 1 position when your first signal comes, and then if it continues, adding as it gets stronger. We're not going to close any position when entering this situation. Instead, we're going to let our stop criteria manage us, and we are going to invest the average value of the portfolio. Now we move to the automation rules when we get a confirmed down signal. We're going to choose, in this case, to go to cash on a confirmed down. That's a major occurrence in the market. And then our automation rules, when we don't have a green light on the color guard, but we don't have a confirmed down yet, well, let's stay with no action. We'll leave our existing positions open until their stop criteria is met, and not open any new positions. For our test period, I'm going to choose that confirmed call range and just go back to July. Remember that first signal for the confirmed call was July 23rd, and our green light buyer beat it just a little bit, so we also had a green light on the 23rd as well as a confirmed up. And then for our end date, I'm actually going to put myself at a little bit of a disadvantage. I'm going to go to that second confirmed down signal, that April 18th, and see how this test holds up through a confirmed down. Now that we've chosen our dates, we'll give this a name. Let's choose FT for fine tune, and this is the bullish side of things. Let's finish and run it. Now, wouldn't it be great if we got our results that fast in real life? Just that quick, you get a 36% gain, annualized rate of return of 49%, and a compounded rate of return of over 52%. Look at the drawdown, 5.5%. Let's go ahead and take a look at our report. We'll go to the situational summary. That equity curve, a thing of beauty. There's our gain and annualized percentage again. I do want you to notice how this compares to the VectorVest composite. The average annualized rate of return, even during this upturn, was only 33%. You made almost 50%. You only had to make 12 trades. One of the reasons for that was because you didn't exit your positions every time the short-term signal changed. You use your stops to manage you. But the second reason is that your stops were able to work much better because you were getting better entry points, waiting for that short-term signal to tell you that there was follow-through. So we did pretty good. But now for the real test. Let's try to make money during that nasty downturn we saw, and that we're still currently in. We got our second confirmed down now because we're at April 18th. It's happened in a very short period of time. We had one in March, we had another one in April. Now when we get them so close together like that, it usually tells us something is up. The market's trend is really struggling. Change is usually imminent at that point. But when in doubt, all you have to do is turn to the views for some guidance. That second confirmed down was on a Monday, the 18th, so the Friday before that, when the VectorVest views comes out, was April 15th. Let's see what it had to say. If we click on the views tab, I already have it set to April 15th, and we went to the strategy section. The question remains, is the great rally over, and are we headed towards a downturn? Signs for now point toward yes. That's pretty clear. The price of the composite just needs to fall one more 5-day trading period to receive a preliminary signal of a sustainable downtrend. Prudent investors should remain on the sidelines and not buy stocks. Aggressive investors and traders should play the market to the downside. So we'll go back to our backtester. And to keep it easy, I'm going to create a new portfolio to test our bearish side of things. Still 25,000. All of that's okay. Go to our market timing. Remember, we're in a confirmed down, our second confirmed down now, and we're going to use the primary wave as our short-term signal to complement that. Once again, we have our rules. The primary wave's telling us that the market is either up or down on a week-over-week basis. For the automation rules, when the primary wave is up, what do I want to do? Some of you might be saying, well, I want to buy stocks. The primary wave is up. But remember, the primary wave is up within a confirmed down signal. There will be relief rallies within a confirmed down, but it's telling us that they aren't likely to last. The odds are against them. That's why we aren't going to bother buying stocks in a confirmed down. We'll just choose to take no action, which means we won't add any new bearish positions. We'll just manage them. And that's exactly what our screen says. Now, for when the confirmed down and the primary wave down agree, what do we want to do here? Well, we'll use the ETFs again. So you don't have to short, don't have to use options. We'll simply go to our search, buying contra ETFs. It'll do the hard work for us. For our stop criteria, and I almost made a mistake here. Going back to the buying contra ETFs, the search tab, by default, it says that we're short. We don't want to short contra ETFs. We buy them. We buy them just like stocks. So you want to make sure you make that change. Now we can go to our stop criteria. We're going to use a trailing stop again, and I'm going to leave this at 10%. As we saw, the downturn tends to be a little bit more volatile. It makes sense that we take our profits a little bit quicker and we manage our risk a little bit tighter. Go to more settings and set it up just the same. 5 positions. We're only going to replace when we get our new signal. We're going to open all 5 at once. feel free to ease in. That's a very smart way to go. And we're not going to close any positions when entering this situation. We're going to use our stops. Our test period. We're starting right where we left off on April 18th. And I'm going to put myself at an even worse disadvantage this time. I'm going to take it through all the way to current, even though we did have a confirmed up signal during this time. And you saw by the market timing graph, there has been a rise over the last several weeks in the market. So will this system hold up? How much pain will we actually experience? Will it be reasonable enough for us to take it and still profit from the downside? Let's give this a name, and we'll stick with FT. And we'll do bearish this time. Choose finish and run. And let's see what happens. Not bad. We get an additional 35% to add to our bullish gains. Almost as much as we made to the upside, we made to the downside. Now we did have more drawdown on the downside, as expected, but it was reasonable. 15% max drawdown. That was the most pain we experienced at any one time. And it looks like it might have been right in this area after we came off the biggest part of the downtrend. Let's take a look at the report. A little bit bumpier equity curve, but I sure like that higher highs and higher lows. 34% gain, 52% annualized rate of return, 56% compounded rate of return during the time that the market was down 22%. 55% winners, your 15% drawdown. You did have to do some trading. That's about 40 trades, but that's in 6 months. And this was all end of day, so all the trades were executed at the next day's open. You, of course, can use limit orders. That's not a problem. But you didn't have to be at your computer at all while the market was open. Still, if that's too much for you, there's an easy solution. Let's say you're using that same $25,000 account. When you buy your contra ETF, consider only buying one and investing a maximum of $5,000. Just trading one contra ETF with a small percentage of your account can give you a fantastic gain, but not risk a lot of your money. In fact, I tested it out and it gave me a 16% gain. Just using $5,000, a fifth of my portfolio, and one contra ETF with this particular system. And the total number of trades? 10. It even cut down the drawdown a little bit further to just 13%. Dr. DeLito has talked about starting small and easing into the market several times. I actually first remember reading this in a special report called Worry-Free Investing. That's exactly what it accomplishes. If the market suddenly flip-flops, you only have to close 1 or 2 positions. Easing into the market instead of plunging in with all of your money makes trading in a volatile market much more comfortable. And I think it'll make you a much more confident investor if you've never tried to invest in contra ETFs before. A lot of people are a little bit afraid of trying the downside of the market, but really with a system like this, you don't have to be, regardless of how you choose to make this timing system your own. The beauty of using this timing system combination is that it lets you enter or re-enter the market anytime. All the information for timing is right on the home page. Let's close this and revisit that for just a moment. Smack in the middle is that color guard. You can't get more obvious than that. Just check to see if we're in a confirmed up or a confirmed down. If we're in a confirmed up, check to see if there's a green light in the price column. If there is, you can buy stocks. If we're in a confirmed down, like we are right now, check to see if the primary wave is down. If we are, you can pick up some bearish positions. During the portfolios we ran, you made 36% on the upturn, another 34% on the downturn, yet a net gain of 69% over this last year and a half. The TXS average, less than 5% during that same time period. I know which one you'd rather have. Even paying taxes can't make it worth your while to take that 5%. All it took was a little fine-tuning, and we managed to make a great system even better. Don't let anyone kid you. There's plenty of money to be made in this market. And with a system like VectorVest, you can invest with confidence and you can achieve results that no other system can provide so consistently and easily. That is going to conclude this week's Strategy of the Week. I hope you enjoyed it. And of course, we invite you to visit VectorVest University for more great free educational videos.